Good morning. Oh, yeah, Mike over there. Good morning, everybody. Happy Tuesday to everybody. Hope you guys are having a good week and have some things planned for Thanksgiving, which most people probably do. So hopefully you guys enjoy that time with the family coming up. Good morning, all. Good morning, all. So we'll get started here a little bit. Let me change this screen real fast. Actually, is that the 200? I guess we'll rock and roll with that. That's fine. Yeah, so, and actually, I kind of want to take this off. Yeah, let's do that for now. Do I want the 200 on? I guess I could take that one off. I don't know what to do. Maybe I'll take it off here. That's fine. And I don't like that the volume's overlapping this chart. Let me get that off too. There we go. Sorry about that. Good morning, guys. Good morning. Yeah, so we'll just kind of pick up where we left off yesterday, and that's that the market is still in a buying operation. And yeah, just because, markets can be in like a buying operation and on the positive side of a trend, it doesn't necessarily mean that you won't see pullbacks and things like that, or that the market goes straight up, right? We also got some economic data coming out today. Obviously, let's see, is it 9 or so? So you got some coming out at 10 a.m. today. 10 a.m., 11 a.m., 11 a.m., all the way up until about 2 p.m. FOMC minutes as well. So quite an interesting day of some data, but nonetheless, we'll see what it comes out to be. Usually don't really make huge predictions about data. Always a kind of rule of thumb is when you're in a buying operation, always kind of feel like data will be used for, positive movement, but that's not always the case. Of course, markets can change and shift. So good morning, guys, and yeah, we'll jump into a couple things. Let me pull up my TradingView stuff. All right, so yeah, back on, what was that, Wednesday, November 20th, 21st? Yeah, 21st, 20th of November, we went into a buy signal on the S&P 500, and the market has stayed long-sided since then. We're currently trending over the key volume level of such buy signal start. Looks like the market is going to be opening, well, we'll see. We have 26 minutes until the open, but we're arguably going to be opening with a gap this morning, so we'll see how that all kind of plays out. Right now, the key over-under is about, well, I want to say the keyest over-under, but key over-under right now you got is about 598.65. So pretty much, again, that's just the over-under spot. Basically, that's the pre-market support rolling into the day. And as long as 598.64 is supported, doesn't break down, so on and so forth, that just tells us that the pre-market, that the volume and the trend that's been created from the pre-market session leading into the open is still intact. Just like yesterday, if we look at yesterday real quick, actually it's ironic because it's the same level, so we'll look at yesterday and we'll kind of go over this. So we'll take a look at yesterday. Again, volume weighted average price leading into the open yesterday would be about literally 598.65. So let's go into a 1 minute chart. Let's go take a look at yesterday's action just real quick so you guys can kind of get an idea for how a lot of this stuff operates. And actually it's kind of incorrect because I'm kind of doing it slightly wrong. 1 second. Whoa, chart, where are we going? I don't know why it took me so far off path. That's odd. better. All right, so real quick, let me get back over to yesterday's action. Sorry if this is kind of lame and boring, kind of moving around a lot, trying to get this all kind of in order. All right, just gonna take these guys off now because I don't really need them. All right, so based off of yesterday's pre-market action, the over/under spot that's derived from the pre-market session for me, basically call it a support watch for the day, over/under, based off pre-market. It's almost like you kind of take everything that pre-market had to offer, all the volume, all the trading, extrapolate that, fancy word, and then plot that price point on the chart, and then it's kind of used into the live hour session. So it's almost like you kind of look at the pre-market session and the live trading hours as two different markets and two different sessions or two different parties. And everyone that was partying in the pre-market, has a hangover, and that hangover can last into the live session and then still be used, so to speak. So everything that happened pre-market yesterday, the way that I view it and many others now, had a support over/under of like 598.75. I think even yesterday I said 598.80s. So right in this area, right? So this is basically the support that we would be looking to maintain to start the day. Once we give it up, then you've effectively stopped out a lot of the traders in the pre-market session or a lot of the volume from the pre-market session. So we'll just do this real quick. Big circle. So take all of this trading from pre-market with some things we use would tell us that we had support yesterday pretty much right around and in that zone. And as long as the market's above it, we look to bounce it and hold the trend up. Okay? So effectively we go up, we pull back to support into the open, and then the live hours, we run the market up. We almost get our gap long target. We've shied that. All right. Market ends up rolling down because the S&P 500, NASDAQ 100, NASDAQ, and the FANG names, the market internals, the market breadth was starting to get weak, and then the FANG names rolled over. That adds selling pressure to the market. We double bottom bounce, that same price point, because we still have volume left over there. Eventually it shakes it out, stops out a bunch of traders, etc., or just volume of the market. Doesn't necessarily have to be traders. And then again, you get below that and ends up fading out and rolling over. All right, so I know that's kind of a long drawn out spiel, but anyways, moving over to today, it's going to be the same scenario in the sense that right now the support based off the pre-market session. So everything that's happened pre-market, from just the gap up to this little flag setup to this move to that sideways consolidation, has created an over/under support at about 598.64. Right? So it can come in many ways. I'm not here to try to predict all the movements perfectly for you guys, but hopefully we could do that. That's always good. But ultimately, that is the over/under support, one of which that I am watching. There's many other ones that a lot of other people use. There's other ones that I still use, but specifically, this always seems to be a pretty good one that I find that my eye likes to look at. So the way we would think about this today for the SPY is just ultimately you have the risk of running back to here and then still being long biased, right? So many will trade a short, right? So they'll look for a short trade that first pulls back, right? Some will just say, I'm not going to short. I'll wait for a pullback into this area, and if it looks good, I'll try a long. Vice versa would be maybe this is all just fugazi, and then eventually you break down, right? So nonetheless, it's really, again, the best way I could explain it is, again, it's just volume in trend. And as long as the market is above that trend, that the pre-market long is still intact. So it's almost like the market's been entirely long bias all morning in the pre-market session, we're going to take the internals from the pre-market session, run it into the live hours today, and as long as we maintain that level in the live hours, the live trading hour session is not stopping out the trend that's been created from the pre-market. All right, so it's just trend tactics staying in line with the pre-market. Okay, you line it, I line it, I line it. That's good. All right, so yeah, that's kind of that. So as far as this goes on the SPY, we're pretty good for now. I can always talk more about it for right now, but right now the over-under's 598.60. Again, as long as the market maintains that, you're not going to really see a big breakdown. Right? You could see the market roll off the top, but it's not going to be a big breakdown. You know, kind of like yesterday, right? You could see the market roll off the top, but unless you get below that and whatnot, it's not a breakdown. Okay? Same scenario today. Ooh, almost spilled that. Okay, what's next? Well, I guess we'll take a peek here at the VIX. And what time is it? 9:12. Would you get onto that screen? Stupid chart. Alrighty. Where are we at? VIX. Yep, okay. Oh, man. That was a missed opportunity yesterday now that I'm seeing it. Yeah, I really like the 15-minute and the 30-minute VIX back test, whether it's a short or a long. They always seem to work really well. But again, it's like sometimes they'll happen when you're at the computer, other times not so much, right? So it's just one of those things, right? When you're there and you're seeing it all in real time, can be that's it. But then again, you'll have to sit in front of your chart every single day for a bajillion hours sometimes, unless you set an alert, which that's another story. But we will start here on this 30-minute chart, and then we're going to navigate to the 15. All right, so just like, you know, and first we'll start here with the SPY, actually. Or wait, I mean, you know, we'll start here with the SPY real quick, and then we'll go back. All right, so you guys remember this right here? This was on, I think it was Wednesday or Thursday of last week, right? So it would have been the 21st or the 22nd, something like that. But either way, concept being, look at how this all kind of lines up, right? So last week we get a long signal on the market above the 50 SMA. I know there was this. We're not talking about that. We're talking about this. But there was a long move over the 50 SMA last week on the S&P, so the market's been entirely positive since then. If we flip this back to the VIX, you're going to see what? You'll see that the VIX broke down the 50 SMA here, and that was Wednesday, Thursday. I think it was the same day or maybe a day after. But ultimately, you know, if we go back to the SPY again real fast, you can also see this, right? So I'll point to it. You can see this breakdown in the market, and then it goes down, right? So that, again, was partly due to the long bias move that we entered on the VIX. So the VIX got positive, we broke out, market went negative, right? When the market went negative, market eventually bottomed, went into a buy signal, and then we went into a sell signal on the volatility index. So since like was that last week or was that, yeah, that was last week Friday or so. I don't know why. I think it was Friday. Let's see. That's Thursday, Friday. Yeah, so last week Friday the VIX broke down. So on Friday of last week the VIX broke down and volatility entered a downtrend. So that's pretty much going to give you kind of a secondary catalyst on the market for being long bias, right? So if we go back to Friday, all right, so here's Friday of last week. So on Friday of last week, the VIX went negative. It didn't lead to a whole lot of activity on the market, and then we kind of had a gap up over the weekend and into Monday. So ultimately the VIX went negative, and then we ended up kind of trading sideways into a massive kind of breakout gap up, if you may. So you start with the market going positive last week, Wednesday, Wednesday, Thursday. So Wednesday, Thursday last week, the market goes into a buying operation, right? But if it's going to be like a good buying operation, you would expect the volatility index would also have confluence, which means it would be negative, right? So last week, Wednesday, we have a positive market, but also a positive VIX. So it's kind of like, it's not supposed to be like that. It can be like that, but eventually it's going to correct itself, and it's going to correct itself in two ways. All right, if you have the if you have the market on last week Wednesday go positive, and then you look at the VIX, and the VIX is positive, again, it's going to correct itself. So it's either going to correct itself in the sense that the VIX enters a downtrend and confirms the long signal that was created on the market on Wednesday. So Wednesday, the market gets a long signal, enters a buying operation. 2 days or a day later, the VIX enters a selling operation, which is an attempt or an effort to confirm the long operation on the market, right? The flip side of that would have been the market goes into a buying operation on Wednesday, the VIX maintains the buying operation, and then the long falls apart on the market, right? So it can happen both ways. But I would say it's more likely that when the market goes into a buying operation and the VIX is in a buying operation, the VIX will fall apart. Because again, normally the markets aren't like fearful all the time, every single day of the week, right? So again, it's more likely that there's not going to be fear in the market as opposed to markets going up. Over the long term, until that changes, markets naturally go up. It's easier for them to go up. So it's harder for you to sustain a market of fear and anxiety and volatility than it is just markets going up and VIX kind of being down. So anyways, that whole spiel pretty much is just the emphasis that the volatility index has gone into a bearish move, right? And one of the things that we're going to look for in the bearish move on the VIX are normally two things, which wasn't perfect yesterday, but ultimately close. So once the VIX goes into a sell operation, the first thing that we're going to look for is a back test to the 15-minute trend. And once that happens, you're going to basically look to stay bearish in the same direction. So it's kind of like a reset on the VIX, and then you look to stay bearish in that same direction, along with the 30-minute. Now, if we go to the 30-minute, you're going to see that we have broken down, but there's no back test. So that just means at some point it's going to happen. All right. Yesterday, we can call this back test the back test of the 15-minute trend, even though it shied. And that's normally the first thing that's going to happen before you even do the 30-minute. But anyway, so all I'm getting at is the market on the VIX is still bearish. We haven't back tested the 30-minute. When we see that and when that opportunity arises, you can use the VIX to either basically try to get back long the market, or if you're into trading volatility and different instruments on the volatility index, you could use that. But it's a setup that's a common occurrence that we will see most likely repeat. All right. So yeah, basically the market is in a buying operation, and until that changes, it hasn't quite changed. Okay, where is, I think it's behind here. All right, let me look at the time here. 9:20. Okay, so we're gonna go into Bitcoin a little bit. As you guys can see, if you've looked at Bitcoin this morning, it's down. It is sold down a decent amount. Hold on, I gotta bring up Twitter because I deleted it. I had it on the screen. I'm always drawing stuff on the screen and doing narrations and all these things, and so I ended up deleting it off my chart, but I did post it to Twitter, so we'll just bring that up real quick. All right, so yesterday, Twitter something. So this was actually, I think this was last week. Yeah, so this was last week. It's actually probably the same day the market went into a buying operation. That was the 21st. So anyways, last week, November 21st, I posted here, Bitcoin is at +2 weekly. In simple terms, once we pass door 2, we get above zone 2, blah, 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 blah. Bitcoin plus 2 weekly has been known to have resistance in the past. If so, it may appear Bitcoin stops around 100K, but it's probably temporary, blah, 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 blah. So this is really just emphasizing that if we looked, once Bitcoin hit 98,995, so basically that 99,000 mark, it's coming into the plus 2 weekly, very common spot to have resistance. So as the market is going up, it hasn't even wicked. We're saying, hey, watch out, because a lot of times this can have resistance, because it's just kind of a common level in that regard. So Bitcoin ends up topping 99, close to 100,000. All right. And then as a result, as it starts to roll over, right? So we found a little resistance at plus 2. As it starts to roll over, we're going to look for that market to essentially pull back and then start attacking things that would make sense on the downside. So key levels and volume trends and volume shelves that have been developed on the way up. So yesterday I posted this, and arguably it's like a little late in terms of like, hey, look at this target down here after it's kind of rolled a little bit. But these things are always developing, right? So nonetheless, we find resistance 99,000-ish and some change around the plus 2 weekly. Market starts to roll over. As a result, we go back down and we target key volume shelves created along the way up. So which means we are looking for a back test. And when I draw a box, whenever I draw a box, that's because I make a zone. So if you ever see a box on stream or if you're on Twitter or wherever, if I make a box, it's basically suggesting that there's a strong chance we're targeting to the top side and the low side. And sometimes I'll do 3. I'll do a line on the top, a line in the middle, line on the bottom. I normally don't do more than that. So if you ever see something on the screen, it's just me providing an analysis in which I believe that there's a strong chance we're going to go to that box and we're going to find, and objectively, it's you have 3 price points or 2, which is the top side and the low side. You're most likely going to hit the top side, maybe bounce middle, maybe bounce bottom, maybe bounce blah, 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 blah. But it's a targetable area on the downside in which we're going to kind of screw with the long bias traders and volume of the market that's already happened previously. So that zone that we have on Bitcoin was 94,000 and some change to 92,900, 93,000 or so. All right. So that's kind of where we're expecting the roll on Bitcoin over the last day or so to kind of move down to. So we had, where was the box? 94,000. So right about 94,000 and some change. So like right here, we'll just draw it there to 90, like right there was 90, almost 93,000. So like right there. All right. So we have essentially come down and sold down into that box, right? Now, as we talked about just yesterday, we have some levels that are as low as like 80,000 here. All right, so you got levels that are as low as like, or it's like 89,000, even a little lower than that, probably like 89 to 87,000, right? So basically that just means, you know, if the market tops more and rolls over, keeps going down, that's kind of like the next level we'll probably think about getting to. Is this really all that important? It's debatable. So, you know, we still have price targets on Bitcoin to like 127,000 or so. Again, it's really my belief that what we're seeing here is just some short-term decrease in the price of Bitcoin, which is ultimately going to get bought up. I couldn't tell. It's hard to say how quick, because a lot of times like it will get bought. It would get bought up off like a key level, and you know it just kind of depends when that occurs. If they're daily levels, it could be days. If it's weeklies, it could be weeks. But to put it simply, kind of just thinking we'll see Bitcoin pull back here a little bit, like it's already done, maybe a little more. Then it's going to get bought up, and then we're going to boost up to maybe like 120 something thousand. Yeah. And that's also because I still see we have a lot of time left on, this, potentially a lot of time left on this current cycle from the last market low to the market top. That's on the assumption that the cycles for Bitcoin, which they have done in the past, continue to repeat a little bit, or at least rhyme. They don't have to be perfect, but if they at least rhyme, then again, we've talked about it. There's still quite a bit of time left on this for the market to keep pushing up, right? So, yeah, good stuff. All right, so let's move over to the SPY real quick, because I think the SPY, is basically pulling back to the key level we talked about. So yeah, you should expect here in like the next second or two. I mean, it does have a green candle here, so it could get held up there, but you know, whatever. So I know we talk a lot on screen, and that's why I try to draw these things and map them off, but here we go. I'll just put this here for now. I know that's kind of like a lot, but you know, that's the really only way you can describe an over under is, again, it's a back test level, it's used as support, and then it's also used as breakdowns. Everyone's like, well, you know, but you know, that's really it. So if you ever guys see me talk about the key over under, put it on the screen. Just know that there's basically 3 different ways you can use that. You can use it as a spot where some more weakness comes in, whereas support, and then when things get, you know, like they kind of were, right? When things get pressed, oops, sorry, I didn't want to do that. When things get pressed away from the key level, they can be used as a back test, right? So kind of think about it like this too. Not that you guys are looking at the markets this way, but you can kind of see a pattern in here, right? It kind of looks like there was like maybe what someone maybe thought was like a bull flag. You can kind of see how the market's like curling up, right? And someone maybe thought that this was like a bull flag setup, right? So even that whole way we were talking, hey guys, we can arguably look for the pullbacks to reset to the key level here. While someone's probably looking at like a bull flag breakout, we're like, well, we can actually pull them down to here and then still bounce it theoretically, right? So, yeah, that's done now. So if anyone tried to or capitalized on the short down to the key level, you would be closing that short if that's the strategy and whatnot that you're going for. All right. Because something like that can happen. Not that this is going to turn into something too crazy, but ultimately, if you look, right, so the market, we've effectively pulled back. Now, we may have shied it by, let's see, that was 68. So we shied that level by 4 cents right there. So it's not quite a direct hit, but yeah, that's the over-under. So essentially, your failed bull flag move, let's just call it that, has sold off back down to support. And if we snap this, that's the key over under. And that's kind of the thing is generally good supports or resistances. So a lot of times a good support is right at a breakdown. So it's like if it holds, it's okay. If it doesn't, the longs dissipate. Same thing with the short, right? A lot of times good shorts are at key over under resistances and kind of break points. And so that's why the market's always kind of a little bit of a challenge in that regard, is a lot of times your good levels are going to be the shift points. So it can be used in like 3 ways, right? So again, 598.64, that's the key over under. And let's see, SPX. Sorry, I'm on a different chart. So SPX has opened with a gap to the upside. So if we have gap and go continuation today and don't just essentially fall apart, we will see SPX towards 6,752. Okay. So I'm going to bring that up real quick. So 6,752 is going to, it could be a little different on this one, be the gap and go target of SPX today, which basically means we'd expect to see, oh shit, come on, computer, pretty close to that, which I circled on the screen there. All right, so now let's look at some market internals. The FANG names have opened up green on the day and are moving up. The NYSE issues, SPY issues, NASDAQ issues, and NASDAQ 100 issues have actually opened and have pulled back. So the FANG right now are kind of leading the charge this morning, whereas the issues across the SPY, NASDAQ 100, and NYSE are a little lackluster right now. So essentially, you're going to have FANG continue to grind out here to get the full SPX target and to prevent SPY from rolling over. If we get weakness on the FANG names, you can expect the opposite, which is kind of a rolling top. But for now, again, it's gap up, market's in a buy signal. So until that changes, it hasn't changed. Now remember too, Snikes, sorry. All right, go on, little market. All right, so remember that this bounce spot over under we're talking about 598.64. All right, that is simply the trend developed from pre-market. So that's the pre-market session trying to stay intact leading into the open. All right. You can almost think of it like this. Like you could literally is not the best word, but you can think of it like the pre-market session is one team. It's one army of traders, and their defense line, based off of everything that's happened this morning pre-market, is 598.64 and give or take. So the live trading session army into the open, it's like right at the end of pre-market into the open, you have the live session army, and they are fighting against the pre-market session army. And we're going to the pre-market army's defense line to put them on tilt. All right, so everyone that was long pre-market, we drew them back into the open, put them on their heels real quick. We could have broke it down. That could happen at times, but you can kind of see how the live trading session have moved the market down to 598.60, and that's effectively putting the pre-market session traders in volume. I don't want to say at max pain, but uneasy until testing key level. All right. So going back over to SPX, again, still not quite there to target, kind of shy. We did just put in a little 1 minute green candle, a few 1 minute green candles on the SPY issues, the NYSE issues, some NASDAQ issues. That can help lead the market up a little bit. Now they're finally getting a little bit of green across some of those other market internals aside from the FANG names. So a lot of times we'll see that situation where some issues will start bearish on the day and then turn around, and just a couple little green candles can kind of help boost the market a bit, but nothing too crazy right now. and this may be not totally accurate here. Let me just double check. Whenever I do it on a small time frame like this, I always get it kind of off. Yeah, so that's kind of... Why does this look stupid? That's better. All right. All right, so that's what it looks like on what's it called, SP or on TradingView. This is what we look. Jeez, that's what we look like on. This is what we look like on. On Thinkorswim. So again, we've gotten pretty close to the first initial kind of gap target of SPX today, which would be, like we said before. I mean, I did it kind of quick, but it looks like, like 6,007, 6,008. And not to mention, we did hit some other algo targets on the QQQ there. So that basically means QQQ got some resistance, so we're going to have to pop 509.39, and then we'll track down the SPX 161. Duh. It's 4-hour dev SPX, gotcha. Dr. Pepper, I just read your message if you're on the stream this morning. Yeah. So, yeah, hold on. Sorry, let me get this out of the way. All right, cool. All right, so let me, well, I was going to say the market internals are not doing what they need to do in this exact moment to continue the press to get that target right now. It doesn't mean that it's just going to dump out things like that, but ultimately, all right, this is what I want to show you guys, right? So if you look at the market internals today, which I know this screen, it's kind of hard to see, but I can zoom in a little bit on each of these. Right, so again, so what see how the market's starting to roll right now? So if you're looking at the SPY, I could bring this back, right? You see how we again rolled the market here? That's because those SPY issues are not acting according. So there's the roll, right? And that also comes off of, again, the 509.39 QQQ 161 target, which we didn't really cover today as well. That's another story. All right, so let me bring back up this guy. All right. So you see how the market internals on the New York Stock Exchange flat, NASDAQ 100 rolling, NASDAQ slightly rolling, and the S&P issues rolling. So you have 1, 2, 3, 4, arguably 4 markets that currently are kind of lackluster, while you have the FANG names that are currently doing okay kind of as a group, right? So as a group, the FANG names are doing okay, which are the major market cap players, right? So those ones are performing good enough to start that initial long press on the QQQ today and to run the SPY up a little bit, right? So if you think about the way that the FANG names are moving, and then we look at the market so far, what do we see? QQQ kind of led this push up, holding up for the moment. The SPY ran up, now rolling over. And if you look at the two markets, right, you still have FANG running to the upside or holding to the upside, right, which is predominant for QQQ. But meanwhile, you have the SPY rolling over. And when you look at the market internals for the SPY, the underlying issues of the market, they're rolling over. NASDAQ 100 are rolling. Some of the NASDAQ's rolling. And the New York Stock Exchange rolling. So there's more equities that currently would negatively affect the SPY than there are QQQ based off the way things are moving. And you can see how you're getting this divergence on the day. How you can see that obviously SPY's leading downside on the roll right now versus the Q's isn't, right? So as soon as we start to see, again, same situation as yesterday, if at any point these FANG names actually start to give up, that's where the Qs will start to play catch up with the SPY and roll over more. Especially if they get negative, which they're not currently. Okay. Wait, where did that go? What is that? Oh, or no, this is supposed to be over there. You guys are so chatty today. So much going on in the chat there. All right. So again, you can see where that market's starting to bounce again. You know, and here's the other thing too is we're not looking like, you see how it's bouncing here, right? Bounce. At least for me, this whole bouncing in this area for me is not derived because it bounced here earlier. All right, let's see. Hold on, I gotta do. I probably can do that, huh? Let's see. Wait, that's weird. Side note, Bitcoin's bouncing a little bit, nothing too crazy, maybe like 500, 600 bucks from when we last looked at it. Let me make sure I'm taking a peek here at the VIX. Wait, what? What am I doing? What am I doing? What am I doing? Gotcha. Ooh, what about this guy? Interesting. Thanks, Magical. Thank you, bub. All right, so it looks like the Fang names just put in a little bit of negative momentum. A little bit. Again, we'll see. Again, it's already kind of creating a little bit of a pullback there on the top of that candle. It's helped the SPY go down a little bit. So if that does end up getting a little follow through, it could hurt the Qs just a tad bit. So we'll see. Again, the fib structure for the market's still intact. So that basically, again, keeps 161 on the SPY still open. We didn't quite get the golden pocket today, but again, you can see down right about golden pocket there. Another little low, another push, etc., etc. SPY still over the pre-market support, which tells us that the pre-market long bias move has not totally been stopped out. They're still holding support right now. Let me bring this up real quick. Again, this is the Fang. Ready? See how? Oh, sorry. See how we put in a little bit of a negative momentum here? A lot of times this can be a precursor, but of course it's not always perfect when you use the max, so ultimately this is going to work out one of two ways, which right now we'll see. It kind of looks like they're going to squeeze them out, but again, we have a negative MAC cross right here. Let me bring it down like this. So right there. So that's where the negative MAC cross has started. All right. And that comes as the QQQ is ran up into a high, etc., etc. So ultimately, if the market on the Fang shake off this little bearish pullback they're going through, the Qs is going to squeeze right back up, and that's going to, as it's happening right now, you can kind of see how the Qs just popped a little bit, how we're getting a little green candles here, and that's ultimately leading to the next run up on the market. So as long as this Qs, as long as this Fang MAC is false, should boost the market up a little bit more here. And now we're starting to get a little positive on the NASDAQ 100, NYSE, things like that. So the market internals are starting to get a little more positive on the SPY, NYSE, NASDAQ, along with maybe a false move there on the Fang, which can again help that boost to the upside. I used to trade a lot more back in the day. I've leaned and done a little bit more of some swing trades on the market, nothing super fancy. If anything, I'll do a couple scalps on the day. Not much more than that. So yeah, I'm kind of evolving though. I used to day trade a lot more, kind of slowing down on that. Just again, my consistency hasn't been where it used to be, unfortunately. Like someone like my partner Brandon too, he will only maybe do like, well, it depends on how you count a trade, but like round trip, like an actual trade, in to out, like maybe 4, maybe 5 max on the day. And arguably because it's just there's not that many good setups, right? There's only a couple really like decent setups that will come throughout the day. So if you don't, or I guess that depends on how you look at things, right? But I would say for myself, or really any of the things that we've taught over the years and mentor on, and things that we've seen that do work and how price action can move, there's only so many like decent setups a day. From good, like maybe call it A plus to like a D plus or whatever. There's only going to be like a handful a day, unless you're just like doing a bunch of scalping or whatever. So there can only be so many trades set up throughout the day. So realistically, I would say don't even aim to be doing more than like 5, right? Because again, through pre-market to live trading hours, so like for example, right, the support that I had mentioned you would look to first initially be long at today is right here, this yellow line, and that was mapped off before the open, right? So let's think about so far where has the best looking support, or where has the best support been at since market open? It was on the yellow line, right? So if you're long there so far, arguably just looking at the chart right now, you had the best 2 long entries based off of how the market's moved so far today. Now, let's say the market did something stupid and like rolled all the way down and crashed, right? You'd be like, oh, well, this support's terrible, right? So it's like, that's kind of the interesting thing, right? So far, the analysis today pointed that basically you should be watching support to start around this area. Boom and boom. Which has led to your first 2 decent long presses on the day for at least the SPY. The QQQ is kind of doing something a little different, right? So how many opportunities did you have off that level? So far 2, right? So to speak. Arguably 1, because you could have thought like maybe this time wasn't going to be as good. And anyways, now I'm kind of going off the rails a bit. So there should really only be like a handful of like decent setups throughout a day normally, which then would constitute only to a handful of trades is kind of where you want to aim to be. All right, so it looks like again, how do I say it? Again, the market internals here, look at, again, see what we're getting? See how the NASDAQ is starting to kind of roll down now? Let me bring it up. Wait a second. What am I bringing? This one, here we go. Again, so you can kind of see, oh, sorry, the FANG names, right? So even from here, we had one little press up, but the momentum across the big names right now, it's still kind of lackluster, right? And so what are we getting now? We're getting this beat red candle on the Q. So as the market is running up into the highs, the momentum across a lot of those big names isn't really positive. We're starting to beat down that candle. And yeah, and so, if we kind of do like a zoomed out view of everything, let me zoom out some here. Right, so it's not like we have an exceptionally bullish market. Yeah, I was gonna say, it's not like the market is exceptionally bullish across the board. Sorry, I was reading a comment there. You can see, again, it's a lot of the FANG is up, NASDAQ down, NASDAQ 100, NASDAQ down. SPY is arguably down, but just going through a little bounce, and the New York Stock Exchange flat. And even the volume, the up-down volume of the market is on the negative side right now. So you have decreasing volume on the New York Stock Exchange, so up to down volume. So volume is less upsided for the moment. And you have essentially what I call one market running, and that's the FANG market. Aside from that, everything is really down to kind of flat. Okay? So when you think about it like that, and then you go and look at the market, let's look at the Qs and look at the SPY. So let's look at all the markets we just talked about. So again, when I'm saying all the markets, it's these 6 screens. So these 6 screens, look at all the markets, NASDAQ 100, NASDAQ, NYSE, et cetera, et cetera. Now let's pull back the curtain, right? So this is the guts of the market, the organs, right? The liver, the intestines, the kidneys, right? This is all of the market internals. There's more that I could look at than this, and I'm sure I could paint better pictures with more, but amongst all of these 6 market internals, we pull back the curtain, and what's that tell us? Again, we have one market that's running up, that's the FANG. Aside from that, everything so far this morning is downsided to kind of flat. What does it look like? The Qs had a nice long push to start the day. In all, the S&P 500 has just had a couple bounces and stayed primarily flat. But the NASDAQ 100, NYSE, and the S&P issues have done what? They've been down to flat. Look at the patterning on your market. Some up and some down, but basically flat, right? So when you're just looking at the SPY, you're just looking at the Qs, you're looking at this pattern being developed, right? But that pattern that gets developed, whatever that might be, all is based upon what the underlying equities of those markets are doing in the real time, right? And in the real time, today, they've been down to flat versus just the FANG names, right? And when you look at your pattern, you go, oh, well, duh. Yeah, it makes perfect sense because everything in the S&P right now is down to slight bounce. The New York Stock Exchange equities are just flat, right? NASDAQ 100, which are some of them are going to be a part of the SPY, are just kind of like down, right? The only thing that was helping our boost today were our FANG names, which they still kind of are, right? And you can see this. This is Apple, Microsoft, Amazon, Meta, Google, Nvidia. I used to have Tesla in here, and I used to have Netflix in here, which I don't know. Maybe I'll put them back, but maybe I should put those back. But anyways, so yeah, that's kind of like the spiel on the day there, how the patterns have developed, the way they've developed. Speaking of, let's see. Oh yeah, so some economic data came out there. Or no, let's see. Yeah, so 2 minutes. So there's also 2 minutes till some data comes out. We'll see what happens with that. And New for Freedom. I don't know if you're still here, but if you are still here, but yeah, long story short, traded a lot more back in the day. Equities, moved some options, pretty much traded everything all at one point or another. And then yeah, like as I get older, my trading slows. I really only try to take things I think make sense, and then really just stick to a little bit more of the investing side. And I guess that's just maybe the evolution of me as a trader or me as myself. But I've had my moments of doing really, really good for myself and some moments of doing really, really bad. And then amongst all of that, you know, you just kind of keep teaching yourself more and more about the market and so on and so forth, right? So everyone's gonna, it's an interesting journey as a trader, an interesting journey as someone who kind of dives down into investing and trading for themselves. In the sense that there's so much to learn. There's so many different strategies, different approaches to getting at the market. So, you know, it's going to be arguably a long journey depending on, you know, what you're trying to do and all the things that you can learn. All right, so data's out. Markets obviously kind of selling off there. Let me pull this back here real quick. Do I think it's interesting that you can only see out? I don't know. You know, I mean, I do and I don't. I mean, I don't know what to think of it, to be honest. I mean, like, I do think it is interesting that it only comes up on Thinkorswim. granted, Thinkorswim was the only platform that showed us the algo wick or dark pool print, if you may, on the S&P 500 to, I don't know, I forget what was it, 370 or basically before the stock market crashed, and we got the phantom wick, the algo wick, and the yeah, whatever that was. That was a couple years back, but that's what I'm saying. It was only you could only, maybe there were some other platforms. I guess I can say for sure, but for sure, Thinkorswim was one of the only probably that showed that big 100-point wick to the downside one day. 364, yeah, that one exactly. And as soon as we saw that, I mean, to me, I'm like, okay, market's gonna crash, and sure enough, we literally crashed within a year. So that's kind of one of those like fairy tale things that I'm almost waiting on again. I'm wondering if we're gonna get such a thing to occur again, and if it does, it can be again a telltale sign of what's to happen next. So honestly, in my belief, I believe it was a signal to all the people that watch the markets closely enough and long enough, even into the retail space, that said, hey, for those of you that sit and watch the computers all day, like this is a signal to you guys that we're going down to 364. So I feel as if I don't know if they'll do that again, but we'll see. Yeah, and, freedom, like I said, paper trading, that's awesome. Paper trade for as long as you want. Of course, it's not like the real thing. The real thing is obviously significantly harder. But, I mean, I could teach you multiple different ways to get into the market, whatever way. And that's just it. You're going to figure out what you like or what you don't like and things that resonate with you. So, yeah. Eugene Perini, thank you. I appreciate that. Yeah, I've worked hard over the years to develop a lot of these things. Hey, Bitcoin bouncing, cool. $10, so that would mean, wait, yeah, never mind. Again, also with this being a little bit of a short week, I don't want to call it a short, well, it is kind of a short week, but with holidays can always make trading a little slower, and usually the case. Not always, but usually the case. Yeah, so Corey, you're right. It's not as easy. And that's because the market is run by algorithms, right? So like even when you're looking at, being over the 50 SMA or below the 50 SMA, it's like that shift can happen in just a few minutes, right? And you have to sit there and make the decision whether it's right for you or not, or the good one or not the good one. And the algorithms are there, right? They'll just start running. So, and that's the thing, is it's kind of how it's designed. I wonder, I guess it looks like it like that. Yeah, exactly. If it were that easy, everyone would do it 100%. Now, there are a couple tactics that I've developed off of that I do think can help minimize some of the confusion. So, I don't know, maybe you're on Discord, maybe you could DM me, I could send you some other stuff about it, but yeah. Oh, I still have the text on the screen there. Look at that. So, And there you have it. So there is a little snap below the key over under. I don't know if we're really going to get, I don't think we're going to get a whole lot of follow through on this market today, just in general, but we actually don't even have an old free Discord. We actually removed all the free stuff now, just to keep it a little bit more simple for us. So we really just use like Discord only for the paid portion of it, and removed the free. Not that that's to entice you to go there, but yeah, we just kind of removed all the free stuff, just trying to make our lives a little bit more simple these days, as far as the managing process of everything goes. So again, guys, that's the key over under level equals targets for back test, uses supports and breakdowns, etc., etc. So let's actually, I'm going to pop this back to a 30-minute real quick. I mean, yeah, market's still positive. The VIX is just kind of, there's no signal on the VIX for us to really do anything right now. The VIX can always do what it wants. It can always move. But when we look at the VIX here today, just in general, we're not at the starting point of anything. We're not at a 15-minute. We're not at a 30-minute. Not a whole lot to do there with that VIX. Bitcoin. Go that way. Actually, let's take a look at USD. Yeah, Ethereum's just kind of doing what it do. BTC.D. Bitcoin dominance, little downside of there. Ah, well then you're good. Yeah. So I was gonna say, like, for example, this is always kind of the one thing. It's like when the market gets bullish or bearish over under the 50 SMA, it's always kind of like, is it legit? Is it not legit? Kind of things. And so, naturally, it's, to me, the easiest kind of confirmation of that one is like, you really got to see it break away from it, and then from there track the 1 and the 5 minute, and then you can add into that. I've noticed that works pretty decent there for that particular situation. When I say add into the 1 minute and 5 minute, anchor 1, 5 minute VWAP on the break point, first pullbacks into the 1 and 5 minute can constitute as kind of like an early long trade or short trade on the intra that starts from the 30 minute. That's a lot to take in. I didn't say that the best. So let's see. Let's just double check. 15 minute still positive. The 5 minute is still positive on the market. So it's like, you don't even, what about the 1 minute? The 1 minute now is, see this? So like, look at how we just transitioned through all those time frames. Ready? So like, starting at the day, let's just start from all the way on the daily chart. Ready? So watch this. So starting from the daily chart's positive, 4 hour chart's positive, 3 hour chart's positive, 2 hours positive, 1 hour is positive, 30 minutes positive, 15 minutes positive, 5 minute is positive, but right now the 1 minute is just trying to go negative. See that? So a little 1 minute micro downtrend is arguably trying to start here. You can see how we've just now breached that 1 minute, right? So the 1 minute micro time frame has basically started a little bit of a roll, right? Now, again, this is 1 minute stuff. Look at, you had a 1 minute breakdown here, and you had a false 1 minute here and here, and so again, it's not necessarily that, oh, just because you're below a 1 minute bearish move starts, but that's the concept, right? Is just now we had a little bit of a 1 minute switcheroo, right? But big trend changes happen around, again, that 30 minute. So take what we just saw in the 1 minute. So take that 1 minute breakdown we just saw, and now assume that this is a 1 minute chart, but this is really a 30 minute. So 30 minute kind of false break, and then boom, down, right? So that's a bigger time frame than the 1 minute, and you can see right here on the 1 minute we're kind of attempting that for so that's the analysis through multi time frames and understanding where you're at. And where we're at right now is the only thing that's actually downtrending on the S&P 500 is maybe a 1 minute, which just barely started. And not to mention, look at the direction of the trend. You can see how it's sloped heavily to the upside. It's not as easy to get something to break down when the slope of the moving average is aggressively in the opposite direction. I would say the most recent one was kind of tricky too, honestly. It's always like that, It's like it actually it started on Wednesday, and then Thursday we got a mega sell off to a back test to then go again. So wasn't the easiest one, which I guess they never really are, to be honest, is the way it seems. So yeah, I mean that's kind of it for me. I'm basically waiting on the next buy signal to add a little back in on this. So yeah, I mean for me it's like, as far as the swing motion on the market, there's nothing to do here for the long side, and the short side was just completed, right? So the short swing market started up here, then it broke down, so that was completed, right? Then the long swing market started here, and now we're all the way here. So that's underway. So the risk here for being swing long it's just not as good. The risk is arguably elevated a bit there. So swing longs aren't really the jam right now. If anything, it's again just that intraday short term scalping, momentum right now. And that's all you have. Just based off where the market's currently at. Here's chat. Brandon killing it today. Brandon looks like he nailed out $4,845. So kudos to him. Again, he's the master scalper of futures. Kid is like a robot basically. So again, he runs the live trading portion of our chat because his consistency is just out of this world. And really understands the futures markets better. So again, anyone who is more interested in the interactive live short-term scalping stuff, definitely Brandon is the man to talk to and kind of be involved with. So that being said, if any of you guys are new or want to mess with it, we do have a paid portion live trading room. I'll send out the coupon code for Black Friday for that. Zero pressure. Where did it go? Where is, YouTube is hiding all of a sudden. I don't really have any idea. Where'd it go? Oh, there it is. Yeah, so Brandon just another level. There we are. Let's see, what else interesting is going to happen today? Probably not a whole lot, considering the Thanksgiving week we're on. Yeah, what we will do here, bring up the market internals again. So everyone's, where did those go? Always so many screens. Weird. There you are. So I'll kind of go enlarge all of these for you guys. Okay, so look at, here's NYSE. Down. All right. Here are the SPY issues. Down, sideways-ish. NASDAQ, advancing declining issues, down. NASDAQ 100, advancing declining issues, down. And lastly, FANG, which has been up, and then all bearish momentum kind of diverging price. So either the momentum down is wrong, or eventually this does end up rolling and catching up. That's kind of the way you would view that. And then as a result, what do we have with our markets? QQQ, up, down, flat, sideways. SPY, up, slightly down. And that makes sense. It makes perfect sense, because that's exactly what the markets behind the scenes are doing. You know, what wouldn't make sense is if the markets were going up, right? If both markets were going up, and the market internals are rolling over, now that doesn't make sense, right? So when you see something like that, that's going to be an early telltale, early sign for a trade. So again, this morning, for example, everything is just screaming to the upside, but all the market internals are down. Eventually, it's going to kind of be lackluster and roll, which is kind of what we saw today. Now, when you think about the gap targets, so think about today when we talked about the gap long targets, right? Basically being we're not going to look for anything higher than 161 today, right? Which that target was 6,960. We hit a high of 6,008. So we missed it by like $2 a share or so, okay? That being said, that's just what the market provided today, was like up to there as a long target. Now, it can always go higher and all this, but again, that's always kind of the first destination for anything gap and go, gap related for the most part. So that can help kind of keep you in rhythm with the market in the sense that you're not going to be looking for a whole lot more than that long for the day to at least start. That way you're not buying a bunch of longs up here knowing you're coming into a potential target. So, and yeah, I mean, I was going to say, it's kind of funny, some of the stuff we're looking at. Some of the news that's coming through. Oh. All right, I'm gonna be right back. I'm gonna go grab myself a refill on coffee. All right, have a good one. Keep freedom free. Okay. Yeah, again, most of the interesting things have probably already happened for the day. Bitcoin not doing a whole lot. Let's go check on our friend Tesla. Tesla. Check on gold. All right, JB, have a good one. Corey, have a good one. Yeah, just taking a quick peek at some of the big names here. Apple's positive, Nvidia's negative, Microsoft's positive. Google fighting to stay positive. Amazon's positive. Meta positive. Which makes sense. Alright, the Qs were going up to start. A couple of the big names on the market are positive. Actually, interesting. Actually, you must. 10-year yield. Might have just got a little bit of a 30-minute long signal, so we might, if it's respected, we'll see the 10-year yield appreciate in price here, or appreciate in price, interest rate go up. Zoom. So Zoom entered, which again, these aren't the cleanest. But let's see. So Zoom has been positive on the 30-minute trend since back here. If this would work. It's right there, but it's also had a lot of false signals on this chart. So, oh, that's the daily chart. My apologies. Yeah, I'm like, something doesn't look right. Yeah, so let's see. So Zoom. Oh, okay, so Zoom just flipped negative today. So Zoom essentially, right, was negative, bottom, transition positive, up, gap up, down, gap down, now flipped trend negative. All right. So this means that, and again, it's not easy by any means, but it is the transition point where you look to be bearish below and bullish above, right? So the price of $83.97 is the transition on the 30-minute. So if we zoom in, and you can kind of see, just looking at the past two motions, we've transitioned that 30-minute, which is at 83.90, all right? So once we go back into like a 1-minute chart, we know that this 83.90 price that we're currently looking at right here, this yellow line, that is where the market tries to go bearish, right? You can see today, I mean, just hindsight 2020, markets open up, go bearish, then go all the way back up, and then below it, down, and then all the way back up, and then below it, lower, high, and down, right? So, again, it's just that shift point. So, if you're looking to be bearish, you know, something like this, I mean, your risk is at least 83.97 or slightly above, at least, right? Because again, if that's the bullish bearish over under, this thing in theory could, let's just say, bounce all the way back up if it wanted to, go back, test resistance, and then maybe it goes back to negative. Vice versa is the trend on this can stay bearish as long as it's, and it's not even, it's actually incorrect. It should be a little higher. 1 second. Should be like up to here. So let's go back. I mean, the concept being is, right, is it doesn't transition to a bullish market until it's over the 50 SMA. So if you think of a stop out in terms of, I'm going to stay in the trade or try to stay in the trade as long as the trend is in my favor or the trend hasn't fully changed, that trend change happens around 84 bucks right now on Zoom, right? So like back here, when the market got bearish, let's say if you were short, I mean, your stop out would have to be basically above this, right? And then down, and then you'd have to stop because you know that that's where the trend can change. So that's the way I kind of visualize a 30-minute. Now, that being said, it's not as easy to use it with like individual stocks and equity. But nonetheless, that's kind of the concept. Now, again, you can see like there's multiple examples where, like even back here, right? I mean, there's multiple examples where market breaks, and then 1 day later breaks down, right? So say for example, the market goes over the 50 SMA here, and you're like, all right, I'm gonna get long, all right. This system alone would say, okay, if I'm gonna get long and I'm long here, then I have to stop out if the market starts to break down here, right? That doesn't look good, but let me just draw it like this. So market goes up, you're long bias the market. You'd have to stop out below the 50 SMA because that's where the trend fails, right? And you can see slam, which means you go negative on that trade, right? Again, not a perfect, well, it's a good system, but the market it's perfectly designed to not be easy for that matter, right? So same thing, watch this, ready? So and then you'll start to kind of realize why it works the way it works, right? Because take this, for example. Take this move on Zoom where, okay, if we go below the 50 SMA, so then you're going short, short, right, short, you have to take off over the 50 SMA. So then, ready? 1 day later, it bounces up. Basically, you're break even back to red, and then boom, right? So there would be your short squeeze. So the previous failed short here kind of helps fuel the fire for this long pop back up. And because everyone that was going, and it's not even retail. Algorithms and computers move like this too. So everything that, say, short-term frequency was bearish here, they had to flip back to bullish, and now they're buying bullish, right? So those high-frequency trading computers can move like that easier than you and I could, and so on and so forth, right? So, like, you know, let's go to like a failed example. 1 second. SNDL up $2. Let's go. What's something that's been like recent? I guess I could find anything really. I mean, these aren't the greatest examples, but let's actually look at this breakdown here, right? So like, let's go to Zoom and look at this breakdown, right? So look at where the breakdown is. All right. So this is another thing that I like to do. Now, I don't really use patterns, but I do notice that patterns generally occur around the 50 SMA in ways that I like. So, for example, you can see, like, as the market gets to here. So as the market comes into, let's just say, this vertical line. All right, so as the market is catching up to the 50 SMA and the market has that deciding decision to make, whether we want to say bullish or maybe the market's going to flip bearish below trend, is there anything leading up to this moment that you might be able to see, right? So again, I'm not a big pattern trader, but I do see these things around the 50 SMA, right? So if we're looking at this, you have head and shoulder, and then where is the breakdown of the neckline and this pattern? Right at the 50 SMA, where the market shifts bearish. So you can kind of see how things develop around things that make sense, right? Your analysis can be a lot better when, you know, like that. The 30-minute chart can help transition stocks bearish or bullish. So as the market gets to that defining point, is there anything leading up to it that might also give you conviction or things that you'd see that make sense? And so for me, it would be like, oh, like this is like a head and shoulders pattern, right? That's coming into the over under. So is it a failed breakdown? Or if we do go bearish, then it's kind of like, all right, this head and shoulders pattern is breaking down, right? So let's go look at what it looks like on, say, like a 1 minute now. Let's go back to wherever that is. I don't even know if I can get there. Let's see. It's got to be right there. Is that it? Wait, that doesn't make sense. No, it was right there. So, yeah, I mean, you can kind of see it right there. So it was, you know, this market on this day, right, had, let's just call it a gap down. Market gets bought up, and then it rolls over again. This is pretty much just the market bouncing previous price action levels, right? And then this is the market on this day opening up. And then right there is where the market finally fails the 50 SMA and gets below it, which just so happens to come in the form of this. And then you break the support, right? So one that would view the chart without the 50 SMA would come to the conclusion, hindsight 2020, that, oh, this is a head and shoulders pattern and it just broke down the neckline and it broke down support. Meanwhile, we and those and on the stream that kind of look at that 50 SMA would think, so as long as the market is above, it can be bullish, and if it's below, it can be bearish. And it's not until we have that day where the market is testing that level that we really get the resolution. So when the market on this day was rolling over, we wouldn't be bearish the stock on that day, right? When the market is rolling over here into this bottom, we wouldn't be bearish thinking, no. And when the market's doing this, we wouldn't be bearish. But when it comes to this day and it breaks down the 50 SMA, we would say, okay, the market is now bearish. And then as a result, the market moves bearishly. And what you see, all said and done, was apparently a head and shoulders pattern. All right. Now, this head and shoulders may have given you some more conviction that, okay, this day we're actually going to break it down, right? And then you could have the idea that this 50 SMAs here, you're going to break it down. Then you could come up with the idea that if we do start to sell the market below the 50 SMA, we get below this support, then everyone who bought these bottoms is going to stop out. And then the pattern will become more relevant. And then you'll have people trade into the pattern for you. All of those things you can kind of start developing around that idea. So hopefully that makes sense. Hope you guys learned a little bit there. Yeah. So, I mean, let's do a couple more of these. I don't know. That was fun. But actually, let's go back, check the SPY. Just because. Whoa. Don't want to do that. Oh, I have it on this chart. Basically, just a choppy nothing. So, that's why we're not even messing with it. So, real quick from the gallery there. Did you guys like that little mini lesson, little example of Zoom and how you might see patterns form into key levels, things like that? Did that help solidify anything for you guys or some ideas? Thanks, John. Appreciate it. Thank you for. Also, sometimes the stream gets a little delayed. Like if you're watching the stream on your end, so like sometimes like if you're not, you actually might not be caught up to the real time of the stream, so you might have to like move the thing forward. So. Yeah. Anyways, so let's move into I don't know, we could do anything really. So like we'll do some Apple here. We'll see if we can develop basically what we just did with Zoom, right? So we're going to zoom into the chart. And so let's pick, I can already see it right here. Here's one. So we'll focus on like this area to start, right? It's kind of awkward. It's not the best, but so we'll take arguably this breakdown. We'll do a breakdown again, right? So we're going to take that breakdown. Okay, so let's get to, or how far is that back? Can I get back that far? 1 second. That might be, yeah, it should be fine. So we'll do this on a 5-minute. Hold on, I gotta figure out where it was. I think it was here. Yeah, it was right there. All right, so arguably, I mean, there's a couple things I can even point out here if we're really going to look into patterns. I mean, but I don't want to get too in depth with it. But so this is right here. So the arrow is the 50 SMA. So that's the breakdown. That's the day that we actually got below it, right? So we'll put a little teddy bear there because that's where you could start to be bearish, is below. Okay, so teddy bears will basically be below that line. That's where the market is trying to, or algorithms or the SMA, the market has shifted in a way that might is more likely to bring bearish momentum to the stock. All right, so for example, on this day, right, we wouldn't be bearish because we obviously know we're in two, real quick, because this one's kind of a little goofy, but it was right here as well. I'll draw like a little box. The 50 SMA was also here too, and it was kind of chopping it a little bit, but it was right about there. So that's also when the market kind of broke up bullish, but anyways, concept being is you can start to be bearish once the market takes out that 50 SMA, which it does so on that day. Leading into, you pretty much have a move up, a low, which you would not be bearish there. Why? Because it's not below the teddy bear. You're not below, right? So you actually wouldn't be bearish on that day. And when I say you're not below, it's not that you're not below this line when you're looking at it. It's here, ready? So it's that 50 SMA, which is right there. So look at the low of this day. So the low of this day is not below the 50 SMA. The market would have had to come all the way down to here to be bearish. Right, it's bearish when he transitioned the 50 SMA, which happens on that day. Okay, so leading up to, and then look at just before, right? So if you look at just before, which is here, sorry, let's change this up. When you look at just before, which is right here, that's where you broke over. So you actually kind of fought with it, didn't really break out, didn't break out. The market decided it wanted to break out here, and it does, which is ultimately just a flag pattern, right? So it basically creates a flag pattern on and below that 50 SMA, and then after hours, whether it be news, whatever, they're like, we're going to break the 50 SMA while you're all sleeping, gap it up into the next day. And there goes your flag pattern breakout. So your flag happens just below the 50 SMA, right? And then they break it out, which then leads to a double top breakdown below the 50 SMA, all right? So that's pretty much what you had there in that situation. You know, I mean, look at, you even had bearish down, right? So this is like a head and shoulders. This one's a head and shoulders right here. It's kind of weird, but like you can see that this is a head and shoulders just in this little section, which is markets over the 50 SMA positive, little pullback. There's your head. There's your breakdown of the 50 SMA, but still equal with the price action. Then roll below 50 SMA, break down your head and shoulders and down. All right? Which then leads into basically like a reversal long flag pattern. Back to a continuation bull flag. Break out, double top M, break down. So again, pretty interesting stuff. So like I said, whenever you're around the 50 SMA, there's a likelihood that there's kind of a pattern that's been developing around it. And then the market's going to use that in the relative future. Yeah. So, I mean, like even this one. So watch this, ready? So you can see this one's pretty clean. Man, let me use this 1 second. Yeah, we'll cover the VIX here in just a second. All right, so here's another one. Ready? So you can even see there's a head and shoulders to flag pattern. Ready? So I'll just put the vertical line right here, Alt V. Okay. So we basically go from bearish, right? Stays bearish, pops up, doesn't really get bullish, right? And then this is where the inverse head and shoulders pattern kind of starts. And you go down, try it again, not quite, then you make the inverse head and shoulders pattern, curl over the 50 SMA, break away. So now the market is getting positive over the 50 SMA. Leads to pullback consolidation to test support. So ready, we're pulling the market back to test the uptrend, which leads to a bull flag. Bottom, off the 50, break out. Okay? So let's go from just the vertical line again. So we'll start from like basically right here, Alt V this time. All right, so within just this small formation, all right, you get a little bit of an inverse head and shoulders formation. All right, so all of the false moves around the 50 SMA basically lead to a small inverse head and shoulders, right? Breakout. So this is the market getting over the 50 SMA and just getting confirmation, however, and works itself up. Now, as long as the market is over the 50 SMA, it stays positive. So as the market comes back to test the 50 SMA, you create a sideways bull flag. And the bottom of the bull flag ends up being the test of the uptrending support. And you break out. So really, the end of the day, it is just that the market got positive here, had follow through, and just stayed bullish. And along the way, you create like this little bull flag. So it's not that, you should be seeking out necessarily a pattern in the market and, I got to find a bull flag. No, you should be seeking out the transition from bullish to bearish in the market. Along the way, there should be a pattern that arguably develops within the direction of that trend, or that's where you would probably start to see those things, is when it makes sense to see something like that, right? Which is if you're positive over the 50 SMA, do you get a bull flag, right? If the market's going to reverse over the 50 SMA or under the 50 SMA, are you seeing something that suggests that? Like, is there a pattern, right? So on and so forth. So like, look at right here. You can see the inverse head and shoulders. Ready? So this goes down, hits the 50 SMA, tries to stay supported, bounces, right? Then it fails, so trend has gone to bearish. And then the trend tries to stay bearish below the 50 SMA, can't, curls over, and breaks out. And there's your inverse head and shoulders over the 50 SMA. All right. Doesn't make it any easier. I mean, doesn't, but bottom line, there's still not going to necessarily be super duper easy. Yeah, so VIX, sure, let's pop over there. Why not? Any thoughts on the VIX being this low? Arguably, yeah. We'll try. I mean, we'll see. I would like to. So yeah, I might be doing this more often. At least going to be streaming throughout this week. Heck, I don't know, maybe I'll talk to Brandon. We might change some things up. Maybe I'll just be live here more frequently. But, Yeah, so looking at the VIX here, Wilson. So any thoughts on the VIX being this low? How long can it hold until market sell happens? My story is going to be pretty much the same as it kind of was with what we were just doing on on Apple and Zoom, but it will be this: the day that the market on the VIX gets positive over the 50 SMA, that's when we'll most likely see the market try to pull back. So again, it's going to come in two ways. So this is basically how it happens. So either something sends a shock to the market, which then throws the market into a sell signal, and then the VIX plays catch up and goes into a buy signal. So that's one way we'll see the VIX increase, is if the market causes volatility. The other one will be is if there's something underlying taking place in the market that isn't obvious to anyone, and the volatility index goes into a buy signal. So it's possible for the volatility index to get positive over the 30-minute prior to the market being negative, which then tells us, hey, volatility's increased. It's even positive on trend. So either the market sees something that the market hasn't quite figured out and it's coming, or that's just wrong, right? And the volatility maybe goes back into a downtrend. But bottom line, as far as the VIX is concerned, this thing it's downsided right now. It's not going to last like that forever. Volatility will pick back up again. I normally expect the volatility to pick up once we're over the 30-minute. The only precursor I use to the 30-minute would be a 15-minute, which is here, right? So you can see how kind of this is relatively clean. You see how the market eventually gives up the 15-minute right here, and we've just been downsided below it since. So once the 15-minute chart transitions and gets positive, I then look for it to go and get to the 30-minute. So even though I say, hey, I think once we're over the 30-minute trend, volatility will come back into the market, which it normally does. I will also say, once we get over the 15-minute, volatility a lot of times can kickstart, but it's over the 30-minute where it really starts. So I use the 15-minute as a precursor to the 30-minute. So even though a lot of people might look at the 30-minute, I'll go one step ahead of that to the 15, and that helps me identify a lot of times when the volatility is going to pick up and at least go back to the 30-minute to then test it. So it's kind of like one step ahead of the transition. It's the early step that's needed, which is the micro 15's got to get positive before we really even consider we're going to see the market go to the 30, which then dictates if we're going to get a full transition on volatility to an uptrend. So what we'll see here the next time around is either the volatility index enters an uptrend, which then spooks the market. Market goes into a selling operation, or we go into a selling operation, and as a result, the market goes down, and then the volatility picks up, and then goes into an uptrend. So I will basically just sit here, and you can too. It's pretty simple. You just basically sit and wait, and then the day that you see the market's flirting with the 30-minute, 50 SMA, you can say, okay, volatility is probably picking back up again, and you will go look at the stock chart, and it will most likely be more bearish than it is bullish, or you're seeing it kind of fight bearish. So yeah, that's the answer on that guy. All right, so let's bring back up the SPY here. Whoa, don't want to do that. All right, so yeah, one second. All right, guys, and also if you look at today's Fibonacci on the SPX, and this is just in relationship to the gap, this isn't necessarily the most important thing you have to look at, but what we do know is from the Fibonacci on today's gap, the market is still maintaining the positive side of trend in that regard, which is market has gapped up. It broke up going for 161, shied it, pulled back, hit golden pocket, now bouncing and staying currently on the upside. So the Fibonacci is still intact, hasn't failed. So today's gap up is in theory still on the positive side, even though we had to pull back a decent amount there. Okay. QQQ definitely positive. This is probably, I wonder if, yeah. Actually, real quick, I was gonna say, I think, yeah, I was gonna say this is actually a pretty decent one to take a look at. Our example here. Yeah, so like this is Microsoft too, so you can see with Microsoft just over like the past day or two. Yeah, so this just happened over the past day or two. Again, you have your Microsoft gets over the 50 SMA, nice big old spike as it gets positive, pulls back, maintains 50 SMA, then breaks out. So again, that was kind of another interesting setup that came with Microsoft there. I mean, you can even see back here, I mean, this is relatively the same thing. Huge gap down below 50 SMA, bottom, curl over 50 SMA. Kind of an awkward formation, but up, so on and so forth. Yep, TQQ, UPRO. Leverage ETFs are good based off the underlying. Come on. Again, there's still a good chance we're going to go up and get the 609.60 mark on the SPY and SPX, or well, SPX, not necessarily SPY, but on SPX it's still open. Again, that's this level stays open for the entire day as long as the Fibonacci stays intact, which it is intact. Ready? So again, we have come down, tested it, didn't break it down. So that 161 is still arguably intact for the day as long as you hold the golden pocket here. with $100. With $100, you can't really do a whole lot. I mean, if a stock is like $100, yeah, I would say with the what the heck am I saying? Oh, SPY hit its 161 today, pretty much. That's funny because usually SPX gets the 161 first. So this is funny that today you can even see here that we pretty much got the gap target on SPY. You can see we ran it all the way up, 1618 top, back, golden pocket, back up. So that's funny because usually it's SPX that does it. But anyways, yeah, I mean with $100 you really can't do a whole lot. You can buy stocks that are like $100 a share, even a little cheaper than that. Again, I would just focus on trying to be positive on the market over the 50 SMA. So I don't know. Someone said something like, for example, let's see, what is this? Nah, gross. Yeah, I mean, the reality is you would just look to be bullish over the 50 SMA. That's really all I can say. Let's like UPRO. So like right here, you can even attempt this. Again, you need more money to really mess with things in that regard, but because you do have PDT and all these things, but you can even swing futures if you want to try that. But yeah, just watching trend, trying to be in line with trend. Yeah, then I would just stick to the over under 50 SMA because that's pretty much a good guideline for when. Because again, it's easier to win or whatnot when you're in direction with the market. Because even if maybe your timing wasn't perfect, but the trend still continues in your favor, and that's a bonus. Versus something like this. Ready? So 1 second. All right. So for example, let's say you're trying to get long the market, right? But it's below the 50 SMA. So you buy this dip and then that fails. And you buy this dip, that fails, right? You buy down here, that fails. You buy right here as it's going up, but then the next day it gaps down. Maybe you stop out, right? Then you buy here, but you're still below the 50 SMA. You might have won. Next day it's down, etc. Right? Versus if you take a long entry when the market is broken over the 50 SMA, then you can, there's a pullback, but it gets bought back up and then it gaps up, right? So it's easier if you're in direction with the trend. Yeah, like that triple levered ETF, and that's why I was kind of pointing this one out, UPRO. I mean, arguably you could have bought, one share, and over the past week, let's see, what did it do? So from the 50 SMA, which won't happen because you're just not going to happen. That's a 6.7% gain. If you even caught it a little high, that's 5%, 4.8%, right? So even if you bought somewhere at this high in this dip, you would now today be up like 95%, 4%. So like even this. So let's just take for example. All right. So we'll say that you basically take swing long here, right? Let's just say you got over the 50 SMA. You're like, I'm gonna do it. So let's just say you buy there. So you add long here. Now you're holding one share, and as the price goes up, right? You wake up and the market's gapped up, right? So it's got this big gap. Then you can wake up on the day and go, okay, so the market's gapped up, which means our 161 target, and we run this for both. It's not really best to be used on SPX or SPY or UPRO. You'd really run it on SPX. So let's go like this. Ready? So though you're long UPRO, we're going to use SPX for more of the analysis side of things. So market pops up, you're long, and then you wake up and you see UPRO and the market have gapped up. This is where I would take a Fibonacci and I would measure the overnight gap. And then I would say, okay, so if we do get the gap and go, then the market is going to target up towards 6,026. So as the market is staying positive on trend and then gapping up, I also have a system to give me an idea where the markets might run to in terms of the overnight gap. And then you could look to maybe lock profit into that, because sometimes they could be a topping point, things like that, and so on and so forth. Now, if you had stayed in the long, right, you didn't sell on the top of this move, but you stay in the long, and then you wake up and then the market gaps up again today, this is where I would go, okay, so we have a gap and go to the upside potentially, or a gap and a move to the upside, where the markets may arguably be targeting 6,009, 6,010. Could they go further than that? Yes, but as like a first desirable location, that's probably where we're going to go. So you can see how today we gap up and we really don't go much higher than that. We get very close to it. Same thing the previous day, we gapped up, ran just shy of it. So that a lot of times it can be a decent marker for the day. So this could help you after you've already been long the market. You see these gap ups to help you kind of get an idea as far as what's going to maybe happen on those gap up days, and how far they might be able to go, and so on and so forth. Yeah. And there's other tools that are also used along with that. See, like, watch this. See this gap day? So on that day, right? So if I had been on YouTube with you guys streaming on this day, right? So what would happen is, this was the election, I think. The overnight, I think this was the election night the next day, right? So on that day, what would have happened was, we'd have this gap, and I would say, hey guys, if we get a gap and go or whatnot, we're going to be looking up to prices of 5,915, right? And then market opens, and we go up and hit 5,915, right? And then on the next day, we gap up. And if I was streaming with you guys on that day, I would have woke up and said, hey guys, the market's gapped up. If we at least get some follow through, we're going to at least be looking somewhere towards 5,958.77. Market opens up, runs up into that price. And then it goes obviously higher than that. That's okay. Ready? And then the next day, there's a little bit of a gap up. Now, this is a small gap up. I have rules for small gap ups. But anyways, I would say, hey guys, there's another gap up. So we're looking up to the price of, basically 5,797.10. And since it's a small gap day, it's more likely we can maybe get some 261s, 361s, so it'd be somewhere up here, blah, 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 right? And then on this day, you can see we get another gap up. So then I'd say, hey guys, we have a gap up today. It's likely that we could see this price increase somewhere to around 161. We might not be looking too much higher than that, blah, 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 blah. But our first target for today's long move will be around 6,014. And you can see run up into 6,014. So you can see from pretty much as soon as the market gets bullish over the 50 SMA, right, let me delete all this. So arrow, market, bullish, 50 SMA, election, Trump wins, market gaps up. We run gap system up, targeting 161 and as kind of like a general rule of thumb. Next day, market gap up, targeting towards general rule of thumb, 161. Here, there's a market gap up, very small, but general rule of thumb, 161. And then we have another gap up here, general rule of thumb, market target, 161. Okay? And then market flips below the 50 SMA, and it goes bearish. And then we have a gap down. So now it would be, hey guys, market's bearish below 50 SMA. We also have a gap down, so we're going to be looking downside arguably to 161. Which here will be 5,885. Okay. Then we fast forward. Here's a gap down. And so we're going to be looking down to target. Oh, wrong way of doing that. We're going to be looking down towards arguably 161. Ready? Market goes all the way up, fails Fibonacci, and that's not working that day. So that strategy doesn't work that day. But also we were on support that day, so we wouldn't be looking for a gap down. I remember that, but anyways. Or gap and go. All right. Market turns positive, goes up. There's a gap up there that fails, and then here's another gap up which got close but failed, and then here's another gap up today which got close and then didn't work, right? So you can see how the market got positive. And then over the past 2 days, I've been streaming with you guys. And then when we've been streaming, we said, hey guys, we're going to first initially, if there's going to be a gap and go, you're going to look up towards 161. This one shied. And then same thing today, gap up, going to look towards 161. Same thing today, market goes up, fails, but very close. So again, the 2 days where we show a strategy to the public online, to YouTube, you're starting to get shies. Pretty common when you kind of announce things and there's enough people watching it. People can front run it, algorithms can front run, things like that. Or it's just arguably not a day where the market's supposed to run enough to do it, and that's completely fine too. But a lot of times, the more you show something, the less likely it is to work, and so on and so forth, and things kind of come and go. But yeah, sounds good. I think we'll end it there for the day, and I will be back on tomorrow morning. And cheers. Have a good rest of your day.